Welcome to my channel. In this video, I'm going to review an article about crypto price trend analysis in 2023 considering bigger picture and macro factors such as inflation, events in crypto industry in 2022 and central banks' outlook. I hope you enjoy it. If you find it interesting, please don't forget to like and subscribe. If you are ready, let's get started. The Bitcoin industry underwent a radical shift in 2017. The not-so-concealed faults in the cryptocurrency market were exposed by the landmine events of 2022. From the first crash of Terra Luna to the concurrent loss of 64% and 68% in value of Bitcoin, BTC, and Ethereum, ETH. When the cryptocurrency market cap passed $3 trillion in the latter weeks of 2021, few predicted it would fall to $727.58 billion the following year. Even if the subsequent failures and bankruptcies were terrible, the FTX Alameda collapse itself was practically unforeseeable. It was a catastrophe, but more importantly, a massive betrayal of trust across entire ecosystems. Why do cryptocurrencies even exist in 2023 if they are so inadequate? There is little question that the Bitcoin industry in 2023 will need to duck and cover from a few potential threats. Analysis of the crypto market's performance over the previous several years reveals that it tracks Bitcoin's 4-year cycle. Typically, the market will have a bullish year, then a corrective year, then a solid year, and finally, an amazing year, in this order. With 2021 being a bullish year and 2022 being a crypto winter, 2023 is anticipated to be a prosperous year for cryptocurrencies. Even though 2023 is expected to be a rough year for the cryptocurrency market, there will be once-in-a-decade chances to invest in both major and little markets. In the next cycle, we should anticipate to see significant development effort put toward and value accumulation in areas like zero-knowledge proofs, NFT technology, and Web3 gaming. A lot of people in the know have mentioned that the current Bitcoin downturn will bottom out by the end of the year. Analysts' predictions that the bear market is nearing an end. This view. For the first few months of 2023, this should propel the value of cryptocurrencies. Retail investors have also experienced significant losses from the many instances in 2022, which may prompt countries that have been sluggish to regulate crypto to take actual efforts to govern the sector in 2023. There has been growing discussion of the potential for the cryptocurrency industry to spread volatility to more established financial markets, which would necessitate more regulation. In light of this, 2023 may be remembered as the year of regulation in the cryptocurrency industry. On the other hand, central bank digital currencies, CBDC, on which several nations have been working for years, may soon see significant advancements. Governments throughout the world have already stated their goal to develop crypto-alike technologies to combat with the burgeoning crypto industry. Therefore, CBDCs may represent a new battleground in the war against cryptocurrencies. In the industrialized world, Bitcoin is seen as a hedge against M2 inflation, which is more stealthy than CPI inflation, and as a long-term store of wealth. Given that India's finance ministry has been publicly advocating for global collaboration on crypto legislation, we see the country as a possible leader in this space. There have been several talks concerning the breadth of industry recognition and regulation as India has presided over the G20. Centralized crypto players, which are susceptible to abuse by those in charge, must be regulated for the ecosystem's full potential to be achieved. In developing economies, non-dollar solutions and remittances are given greater weight. If the predicted recession materializes, the Federal Reserve will likely wait to raise interest rates since falling inflation would allow the government to keep printing money and running deficits. In the absence of any unfavorable press around cryptocurrencies, the price of Bitcoin could be able to scale the wall of anxiety and return to $25,000. As the U.S. central bank tackles persistently high inflation, most Federal Reserve members expect the benchmark interest rate to rise beyond 5% in 2023. In 2024, following a brief break in rates, decreases are anticipated to resume. And that's an improvement over the median forecast from September 2023, which was for 4.6%, so it fits in with the bigger picture. Long-term and median estimates for 2022, however, both stayed put at 2.5% and 4.4%, respectively. There is a war on to improve the security, privacy, and verifiability of digital asset trade and administration, and this sector is fighting for any advantage it can get. With so much planned for the next year, supporters of cryptocurrencies who have maintained their optimism and skeptics who continue to doubt their feasibility both have reason to be optimistic. Thank you so much for watching. Please don't forget to like and subscribe and looking forward for your comments.